Hello friends, welcome to Business Hologram YouTube channel. Today we will be reviewing the company Strides Pharma Science Limited. So let's look at the company overview. Strides Pharma Science Limited is a leading Indian pharmaceutical company with a significant global presence, specializing in intellectual property-led niche pharmaceutical products and complex generics. Headquartered in Bengaluru, India, the company operates across both regulated and emerging markets with a strategic focus on differentiated dosage forms. So let's look at the core business and segments of the company. Strides operates a dual focus strategy targeting high value regulated markets like US and Europe and high growth emerging markets including Africa and Southeast Asia. So let's look at the regulated markets aspect. A major focus on the US market through its subsidiary Strides Pharma Incorporation. The company develops complex generics across varied dosage forms such as nasal sprays, soft gelatin capsules, topicals, liquids, and tablets. Now let's look at their emerging markets and Africa and Asia aspect. Strides has a robust presence in Africa, recently strengthened by the March 2026 acquisition of multiple generic brands from Sandoz to bolster its South African portfolio. Next, let's look at their institutional business. Supplies anti-retroviral, anti-malarial, and anti-tuberculosis drugs to globally funded aid projects and procurement agencies. A dedicated platform for B2B partnerships offering manufacturing and regulatory expertise to partners in over 100 countries. So they are maintaining a dedicated platform which is called Synergize. If we look at their manufacturing and research and development infrastructure, they have state-of-the-art facilities located in India, Italy, Kenya, and the United States. They have 7 facilities of such. If you look at the compliance aspects, 4 of these facilities are USFDA approved, and R&D part, centralized R&D in India focused on complex formulations and inpatient or the intellectual property driven product development. So if you look at the stock performance, the current stock price of the company stands at 1092 and the market cap stands at 10,067 crore, which falls into the mid cap segment. If we look at the 52-week high-low values of the company, the highest value reached is 1,110 and the lowest value reached is 615. Now let's look at the financial performance of the company for the last 4 quarters. As you can see, the data is shown in the screen. Strides Pharma Science has shown a strong upward trajectory over the last 4 quarters, characterized by significant margin expansion and a focus on debt reduction. So from the data, let's see the key financial highlights. First point that we can derive from the data is profitability surge. The company achieved a 7-quarter high operating margin of 19.8% in Q3 FY26. This was driven by a shift towards high margin niche products and better cost management. Next point is US market recovery. The US business has stabilized, generating around 71 million to 77 million per quarter. Management is targeting $400 million in annual US revenue by FY28. If you look at the debt profile, there has been a consistent effort to deleverage the balance sheet. Net debt was reduced by 512 crore over the course of FY25, bringing the net debt to EBITDA ratio down to approximately 1.65 to 1.9. Next point is efficiency metrics. Return on capital employed has improved steadily, moving from roughly 15.1% in Q1 FY26 to 16 by Q2 FY26. So now let's look at some of the strategic initiatives of the company. The first point that we are considering is the OneSource spin-off strategy. The most significant strategic move in 2026 is the creation of OneSource Specialty Pharma Limited. This entity is a merger of Strides softgel business, Steriscience, and Brooks Steriscience. The goal is to create a pure play contract development and manufacturing organization focused on complex injectables and specialty products. In February 2026, the status as on date is the company received no objection letters from NSE and BSE, clearing the path for its listing as an independent entity. This allows Strides to unlock value for shareholders while focusing on its core oral solids and ex-US businesses. Next point to be considered in strategy is diversification, the ex-US growth engine. While many Indian pharma companies are overly dependent on the US, Strides is aggressively diversifying. First point is the Africa expansion. In March 2026, Strides acquired a portfolio of generic brands from Sandoz in South Africa. This strengthens their position as a top-tier player in the African branded generics market. Next is regulated markets, that is non-US regulated markets. In Q3 FY26, the other regulated markets, UK, Europe, Australia, grew by 20% year on year, acting as a critical hedge against pricing pressure in the US market. The next strategic initiative is operational efficiency and debt reduction. Strides has moved from a period of high capital expenditure to a period of cash generation. Next point is tech enablement, that is the digital transformation. In early 2026, Strides completed the acquisition of Neviton Softtech. This is in the pill making acquisition. It's a digital one. Purpose is to integrate AI and advanced data analytics into their supply chain and R&D process, reducing the time to market for complex generic filings. Next point is the leadership transition. To spearhead the next phase of North American growth, the company appointed Peter Hardwick as the CEO of Strides Pharma Incorporation in early 2026. This signals a move towards more aggressive, localized leadership in the US to handle the evolving tariff and regulatory environment. Now let's look at the ownership structure of the company. The ownership structure of Strides Pharma Science as of April 2026 reflects a balanced mix between founders, significant foreign institutional backing, and public participation. As you can see in the screen, the promoters hold 27.91% shares, foreign institutional investors 28.68%, public and retail investors 28.95%, mutual funds 8.56%, insurance companies 4.54%, and other domestic institutions 1.36%. So key takeaways from the ownership structure is the promoters led by Prononyms Ventures LLP recently marginally increased their stake from 27.86 to 27.91 in the March 2026 quarter. This signals confidence in the company's OneSource demerger strategy. Next point that we can derive from the data is institutional confidence. The company has a very high institutional holding, both FII plus DII, of nearly 40%. Notable investors include Route One Investment Company, Quent Mutual Fund, the Vanguard Group. Next is the high net worth individuals. Many well-known investors maintain a significant position in the company, often viewed as a positive signal for mid-cap stocks. Next point that we should consider is the OneSource split. As part of the ongoing strategic restructuring, the ownership structure is evolving. Current Strides shareholders are expected to receive shares in OneSource Specialty Pharma, which is the new demerged entity. Early data of OneSource suggests its promoter holding will be slightly higher at approximately 30% to ensure strong leadership control over the specialty CDMO business. Now let's move to the financial ratio analysis. First, we will consider the profitability ratios. As you can see in the screen, the EBITDA margin of the company stands at 19.8%, where the industry average is 24 to 25%. So the value stands at a lower status. The net profit margin and the PAT margin stands at 11 to 12% for the company, where the industry average is 15 to 18%. So in this case also the company is showing a bit lower value. Next is return on equity. The company's value stands at 20.7, where the industry average is 16 to 18%. So in this aspect, the company is maintaining a higher value, which is good. In the case of return on capital employed, also the value of the company stands at 16.6. The industry average is 14 to 15%. In this aspect also, the company is maintaining a higher than industry average value. Now let's look at the leverage ratios of the company. First is debt to equity ratio. The company's value stands at 0.39, where the industry average is 0.24. So the company is maintaining a bit higher value in this aspect. It's always better to maintain a lower debt to equity ratio. And next point is interest to coverage ratio. The company's value stands at 4.5, where the industry average is 8 to 10. Which the company is maintaining a lower value. It's always good to have a higher interest coverage ratio. Now let's look at the leverage ratios of the company. First is PE ratio. The company's value stands at 17.47 to 18.59, where the industry average is 39.4. So its PE ratio is at a much lower side. So this is a good factor of the company. Next is price to book value. The company's value stands at 3.35, where the industry average is 4.526. In this case also the company maintains a reasonable value. Next, if you look at the price to sales ratio, the company's value stands at 1.8, where the industry average is 3.524. So we can clearly say that the company's stock is undervalued in this aspect. Now let's do a SWOT analysis of the company. First, we will start with the strengths of the company. First point that we are considering under strengths is complex portfolio leadership. Dominance in high entry barrier segments like soft gel capsules, sterile injectables and nasal sprays, which command higher margins than standard tablets. So the company is operating on such domains is a clear strength for the company. Next point is de-risked revenue model, balanced geographic presence across North America, Europe, Australia, and a growing leadership position in the African branded generics market. Next point is operational turnaround, successful expansion of EBITDA margins from 13% to nearly 20% within 2 fiscal years through cost optimization and a shift to profit first products. So these are the strengths of the company. Now let's look at some of the weaknesses of the company. First point is high promoter pledging. Despite recent improvements, a significant portion of promoter shares remains pledged, which can create volatility in the stock price. Next point is contingent liabilities. Ongoing corporate guarantees provided to group entities like OneSource represent a potential financial drain if those entities face liquidity issues. Next point is historical debt perception. While the debt to equity ratio has dropped to 0.39, the company is still shaking off its market reputation as a highly leveraged entity, which keeps its valuation below the industry average. Now let's look at the opportunities of the company. First point that we are considering is OneSource demerger. The upcoming independent listing of OneSource Specialty Pharma is a major catalyst to unlock shareholder value by creating a pure play contract development and manufacturing organization, that is a CDMO powerhouse. Next point is African market expansion. The 2026 acquisition of the Sandoz portfolio in South Africa provides a massive runway for growth in high margin branded generics in emerging markets. Next opportunity for the company is biosimilar and CDMO tailwinds, increasing global demand for outsourced manufacturing positions their specialized facilities to capture long-term contracts from big pharma. Next point is digital integration. The acquisition of Neviton Softtech allows for AI-driven R&D, potentially reducing the time to market for complex generic filings. Now let's look at some of the threats faced by the company. First point is regulatory scrutiny. As a global player, the company is perpetually at risk of US FDA warning letters or import bans if manufacturing standards at any site slip. The next point is pricing pressure in the US. Despite moving to niche products, the base US generics business remains subject to aggressive price erosion and buyer consolidation. Next point is currency and geopolitical risk. Operating in 100 plus countries, including volatile regions in Africa, exposes the company to sudden currency devaluations and supply chain disruptions. So that's all about the company analysis of Stride Pharma in a nutshell. If you found the video useful, please like, subscribe, share, and support. Thank you.